One of my favorite can't live without tools in trading is the cumulative volume delta, which is a way of analyzing the volume in a market to measure buying and selling pressure. I use it to help determine if a trade idea is likely to have the market behind it, and once I'm in a trade, if I should continue to hold or go ahead and book my profits. It's not an entry strategy on its own, but it can help support or oppose a trade setup, so I know whether to take it and how heavily to position, or it can support or oppose a trade that I'm already in, letting me know if I should hold or go ahead and close and get the profits booked. I want to show you what it is and how to use it. It can sound really advanced and fancy, but it can be a really simple tool once you know how to use it. So stick with me through these crazy looking charts and I'll show you how this works. For the cumulative delta, we're analyzing the order flow, which is the actual buy and sell orders being placed in the market in real time. There are a lot of ways that we can analyze and use this data. We can watch the order flow to see the time, price, and quantity of orders in the time and sales. And there are a few other ways that we can look at it more visually, like bookmap and volumetric charts. For the cumulative delta, we're measuring the number of buyers and sellers in the market over time, similarly to how we measure the price over time. There's a buyer and a seller for each trade in the market, and the markets work by matching the buyers and sellers at a specific price. So how can we determine if the volume is from buyers or sellers? There are basically two types of orders in the market. There's passive orders and aggressive orders. The passive orders are they're the resting limit orders that are just sitting there waiting. These are active orders, but they're waiting for the market to come to them at a specific price. They aren't executed right away, and they're just passively chilling without any real urgency to get in or out of the market. On the other hand, there's aggressive orders, and those will be the market orders. Those are placed actively in the market by traders looking to execute as quickly as possible, immediately, with the priority being on getting in or out of the trade rather than trading at a specific price. Market buys are executed at the ask price, while market sells are executed at the bid price. When we have a lot of market orders come into the market, they can start to sweep the bid or ask prices, causing pressure in the market and as a result, price movement. If the market runs out of passive orders at a price level, the aggressive orders will drive price towards either the bid or the ask. In general, delta represents a difference between two measurements, and that's exactly what we're looking at. This is a volumetric footprint chart rather than a candlestick chart, which is a way of showing a lot of order flow volume information, including the buy and sell orders. We can see at a price level how many buy orders versus how many sell orders there are in a time-based candle. We're going to be using the simple chart that I showed you at the beginning, but this chart will help show you what's going on under the hood. I'm using NinjaTrader 8 with the optional Order Flow Plus data suite. There are a lot of other providers who offer order flow data. Ninja just happens to be my personal favorite. The best order flow data providers will use tick-based data. TradingView now has cumulative delta data, although their data is not tick-based, and I haven't found it to be really as reliable or easy to use, but it is an option. Try this out with whatever you have access to first, and if it's not giving you the right information, you know to look for a data provider who can provide data on each tick rather than just time-based data. On the left, these are the sell orders that happened within this candle at the particular price levels. On the right, these are the buy orders. If we take the difference between the total number of buy and sell orders in the candle by giving the buy orders a positive value and the sell orders a negative value, we get the cumulative delta for that candle. It will be positive if there's more buy orders than sell orders, and negative if there's more sell orders than buy orders. So how do I use it? This chart is great at getting all of the details, and there's a lot more that we could dive into on another day, but it's a lot for a trading chart. So instead of looking at all of this information, I plop the cumulative delta plot on a regular candlestick chart that's a lot easier for me to take actual trades on. For intraday day trading, I'm looking for divergences between price and cumulative delta, just like I'd watch for divergence in another indicator like RSI. In an orderly market, price and the cumulative volume delta will move together. When we get a divergence, something is going on and I want to pay attention. Just like with most tools I use, I may watch this on a super low time frame chart like a 1 or a 2 minute, but I'm not going to pay as much attention to them unless I'm using it to help me time a entry that I've already determined on a higher time frame chart. I mostly watch the cumulative delta on a 5-minute chart, but a 3-minute can be interesting as well. I just find the lower time frames have too much noise. This chart is live today and it is showing a divergence. Price is below the regular trading hours open while delta is holding above. With the delta holding this strong coming into power hour, I'll be cautious of shorts because with this much buy volume being absorbed, support is less likely to break and we're already at lows. If I see a long setting up, I know that the volume is showing a buy trend on the day while price is low, so it could be an opportunity to catch a good buy on a reversal. I would have normally looked to play this divergence coming into the 6,000 century figure support, at least if it was one of the first times we've been there. And this one is taking a while to play out. Today, we're digesting some less than ideal CPI data that has strengthened the dollar, and we're waiting for Fed Chair Jerome Powell to speak, which is causing the ES futures to struggle here while waiting on direction. And it's important to always take everything in context on what's going on today. A day with a heavy news impact like today is not necessarily going to be a day where the order flow data can give you a really strong edge because there's a lot of other factors at play like the bond and currency markets or even geopolitical events. But when the market is in a place where it's free to market, this feels like an absolute cheat code. We can check in and see how this plays out today, but while we're waiting for that, let's look back and see how the cumulative delta divergences have worked out on some more typical trading days. Here's an example of a day with no notable divergence to speak of. Price and the order flow cumulative delta are following the same general swing highs and lows. However, on the prior day, price made a new trending swing high while the delta was relatively flat and just sort of double topped right at 60.40, which was a resistance and a price target level, offering some confidence in scalping a short from this level, which ultimately gave around 20 points. The bounce later was confirmed a little late, but personally, I probably would be out for the day after getting 20 ES points that I was able to go into confidently with size for breakfast. Here's one that doesn't really work out. After an initial drive with agreement between price and delta, delta takes a nosedive while ES holds price and even walks up end of day. When we have a divergence between the order flow cumulative volume delta and price, what we're looking at is absorption. And when it comes to probabilities in a mathematical edge, more times than not, the absorption will eventually break with a reaction, but not always during our trading hours. And that's why any trade execution and management plan needs a point at which you can declare yourself wrong. This tool won't always offer you that, which is why it's not a standalone strategy, but it is a way to confirm or boost your confidence in your strategies, which I know we all need a lot more of. On this day, price was looking for a discount while volume was negative, but not to an extreme where it could make a swing low. Ultimately, this gave into a bounce. As a level-to-level trader, if I had support down here in the 57.25 to 30 range, and I believe I did, the way delta holds here can help give me confidence in an entry here to target the next resistance for some nice profits. Let's look at one more, and happens to be a good one to circle back to, because this is a day where we have a lot of agreement between price and what we're seeing on the order flow. So we have an orderly flow of swing highs and lows. So let's go back to today. While we were looking back at where we've been, Powell has come on and is speaking. The indexes all took an initial hit when his talk opened, while the US dollar and VIX volatility index spiked. We have 30 minutes of regular trading hours left, and the delta is still stronger than price. I'll keep talking and then speed this up behind me so you can see how it plays out. I'm taking notes on how all day today, despite price pulling back, the volume delta is indicating a positive order flow. Order flow is certainly a helpful tool for intraday trading, but it's also helpful in swing trading and in general market analysis that can help you form your plan and potential lean for the day. I've taken enough of your time for now, so I'll show you how to use the volume delta for swing trading another time. But if you have any questions about this or any other trading questions, I'd love to hear from you in the comments on my website or in my trading chat. Okay, this has given me some ideas and I need to go put some orders in, but I love you and I will talk to you soon.